block trade, for example, and you don't have to have it designated as a buy or a sell. It's the location of the block trade will tell you what it is. If I get a block trade there, what is it? Is it a buy or a sell order? It is 100% a buy order, right? It's 100% a buy order. Why is it 100% a buy order? Well, it's 100% a buy order because who the hell would give you a price like that? Nobody. So the only price you'll ever get as a block buyer is a bad price, right? You're always going to get a bad price. But the deal is, you know, that the dealers are now going to do something interesting because these guys aren't, because obviously a market maker sold this order, right? A market maker's gone short here. So the deal is very simple. They will not press the price higher. So what's going to happen is that the deal is that the price will come back down and allow the market makers to clear that order. And if the guy that bought here wants to buy some more, they can buy some more, so long as it's at lower prices. So obviously when it runs into the bottom edge here, you're going to be looking for that opportunity to take your short. And obviously once the market makers cleared the order, then there's going to be a very good chance that that's going to rip. So that's what we did in Walmart. So somebody was taking a lot of business at 103.90s, 104s. So I put in a buy limit at 103.50s. And I got filled at 103.50s, traded back to 104s for 50 cents. It's not much, as I said, but sometimes it does and sometimes it doesn't. Well, the same is true of these big block trades on the likes of volatility. If somebody's done a big block trade in volatility, it won't mark from that price, or at least you're hoping it doesn't mark from that price. And the market maker's got a chance to clear it. Well, if the market maker's got a chance to clear it, so have you. You've got a chance to clear it. Get the liquidity into the right price and take your shots at the right price.